More. Let's bring in Rashawn Williams from Manhattan Venture Partners. His former fund, Queensbridge Venture Fund, was an early investor back in 2013. His current fund, the MVP All-Star Fund, has been an investor since 2018. So I guess it's congratulations on what must be a very profitable day for you.
It's probably been one of the best weeks of my career, so you probably can't tell. But as soon as we hang up from doing this interview, I'm probably hopping on a jet and going on vacation.
Well, lucky you, in all sorts of ways, Rashawn. To what extent do you accept when people suggest, well, look, this has been a fantastic moment going public, but that there's going to be a lot more competition? We just heard Seema mention what the Winklevoss twins were talking about in Gemini, and that there's a lot more competition to come.
Yeah, I remember kind of starting on Wall Street back in 2001, looking at all of the different banks, and it was the same debate then when the financial service institutions were all competing with each other. Then there was a lot of consolidation. What you're really betting here when you invest in something like Coinbase is the fintech industry in general, blockchain specifically, and then you're looking at how they can get all of the users and expand product offerings to them. So if you fundamentally believe that blockchain and crypto is going to be around and that market will continue to increase in size, then you know that there's room for more than one winner. So we love competition, and Coinbase has been dominant when it comes to competition for the last 8 years, and we think they will continue to be.
So where does the growth then come from? If you are expecting the margins to compress and those fees to compress as competition comes in, how do they grow into a valuation worth $100 billion, or I guess in the 70s now where it closed?
Yeah, well, I remember when we started doing late stage tech investing at Manhattan Venture Partners, a lot of people said late stage tech was overvalued, but they're looking at it the wrong way. So when you look at publicly traded companies, the average compounded annual growth rate of publicly traded companies is anywhere between 3% and 5%. When you look at a company like Coinbase that's been growing at 100% and literally did $1.3 billion in revenue last year and repeated that this first quarter, the growth rate is insane. So it warrants a higher valuation. And I also remember people saying $100 billion valuation was too high for tech companies. Now you have the Apples and the Amazons out there that have clearly proven people wrong. So for this company, you have to look at what got them there. And if for your viewers, here are the 5 things you need to look at in order to determine whether or not this company is going to continue to grow. Number one, the obvious answer, the strong growth rate that they've already been experiencing on the revenue side. But number two, you got to look at the user base. 56 million users is an astronomical, insane amount of users for a company that started 7 or 8 years ago. The second thing is how quickly that revenue growth rate is going on a quarter-by-quarter basis and even on an annual basis. I have never seen numbers like this on a company that's doing more than $1 billion in revenue. The CAGR starts to come down as the revenue goes up. In this case, it seems like it's just increasing every year. And here's the fourth thing, profitability. When you're profitable, you don't have to rely on the capital markets to innovate. So you'll see them doing stuff like expanding into other business lines and other verticals. That's very important, that the same DNA that got them innovating and competitive and dominant in the industry that they continue to do. Now they're profitable, they're growing, they have public markets, they can acquire people. I think you're going to continue to see the dominance that they've displayed over the last 7 years.
What's the fifth thing?
Oh, number one, strong revenue growth. Number two, enormous user base and that continued growth. Number three, CAGR. Number four, profitability. And then number five, actually, is the growing TAM. So one thing that people don't talk about with Coinbase a lot is how the total addressable market is actually increasing for crypto, for digital currencies. It's not decreasing. So it's really hard to know what this company will be doing in 5 years because there's more water in the ocean today than there was 7 years ago. So that's one of the most exciting things about this company. I would say the same thing about Amazon. 20 years ago, you would have never known that the market would be as big. But I really think that Coinbase has an opportunity to continue to expand the market, mature the market, make it more mainstream. And we still don't even have institutions in Wall Street in the marketplace yet. So all of these things bode well for their fundamental analysis. But then obviously you can look at the technicals, and all of these millions of users finally get a chance to buy this stock. And once it gets picked up in the index, I think over the next 12 months, this thing is easy 2x where it is now.
Shepard Smith here. Thanks for watching CNBC on YouTube.